Well, good afternoon, everyone. It's great to have the crowd here, and welcome to our panel discussion on financial inclusion. I'm Nicole Anderson, and I'm CEO of a company called FinTech Circle Innovate. We're London-based, and we look at connecting the FinTech ecosystem to enterprise mandates in innovation and venture. Alongside me, I have some amazing talent in the world of finance, specifically the inclusion part thereof. I have Vitus with me, who's CEO of Manitas. Manitas is a technology platform company based in Switzerland, taking its platform strategy to frontier markets and enabling financial inclusion in a number of different ways. We'll hear a little bit more about Vitus and his company a little bit later. We have John. John is CIO of Lloyd's Business Group, responsible for digital and transformation. To my right, we have the infamous Matteo Rizzi. Matteo is an advisor to Omadar Networks, a specialist investor in social impact causes and many other things. And we have John. John is with Quona Capital. Quona Capital, beg your pardon, must have needed more lunch actually. Quona are focused on investing again in emerging markets, so real kind of key social causes in emerging markets. So fantastic to have you all here. I'm going to just get the conversation flowing with a few statistics, which I'm sure many of you are familiar with. So we've all heard the term 2.5 billion customers. This is kind of this magic pool of potential customers globally that provide an immense opportunity to us as individuals and companies operating in finance. But for the cause and the good of the globe as a whole, this is an incredibly important segment. But financial inclusion is up for debate and has many different definitions, and I'm going to turn to my panel members to give their own interpretation. But for much time, it has had a very dark side. So, these statistics have come out from the World Economic Forum just of late, and are pretty startling. So, nearly 40% of adults globally do not use a form of financial services in any shape or form. 73% of the so-called poor are unbanked, not because of knowledge or need, but simply because of distribution and access costs. So there is tremendous friction in the system. This in itself represents 40% of households in developing countries. And almost 25% of adults globally do not have a bank account. That is an average compared to the average of about 3% in developed markets. But there is a light at the end of the tunnel. The World Bank produced this information just of late, which again was quite an interesting story. So in 2014, 56% of adults reported having saved or set aside money in the last 12 months. It's heartwarming to see that a territory like Sub-Saharan Africa represented a way higher percentage of that than some developed markets. Again, the policymakers and the regulators are taking this pretty seriously, and 67% of bank regulators have a mandate to promote financial inclusion, as well as 50 countries who have set formal targets and ambitious goals for the same need. Developing countries are not just huge markets for all of us, but also originators of innovation, and again are beginning to enjoy global investor interest. And you'll hear more of that on the panel. And Alfred Hanning at the IMF World Bank Spring Conference was famously quoted as saying, "Financial inclusion is no longer a fringe subject. It is now recognized as an important part of mainstream thinking in economic development based on country leadership." So with that said, what I'd like to do now is I'd like to hand over to each of the panel members with a brief introduction of themselves and their own definition of what they think financial inclusion means to them. Vitus.
Okay, thank you, Nicole. My name is Whittle, CMO of Monetas. As it was mentioned before, we have developed a platform on which anyone in the world can trade any asset type safely, faster, and at lower cost than with any other system. Now, financial inclusion to me has two notions basically. One is the notion that it has been recognized widely by now that financial inclusion is the most important element to start building growth and personal wealth. So if you have no opportunity to store or to transact safely your assets, if you only rely on cash, even for your pensions or things like that, then you are bound to lose quite a lot. So that is the thing, quite mandatory, I would say, for our world today, that we do our utmost to get also the second half of the adult population into the global economy. Obviously, if we can have them included in the economy, that is also giving a lot of spring off for the development of the global economy, because as you mentioned rightly, there's a lot of initiatives going on there. The second part, and that's why we are here all together, I think it's a huge business opportunity. So assuming that there are several trillions of transactions only, and that does not take into account any kind of sophisticated financial services. That's a huge market which we would be foolish not to tap into.
Very good. Thank you, Vitas. John.
Hi, I'm John Webster. I'm the CIO for Digital and Transformation in Lloyds Banking Group. So the digital bit means I look after the provision of all of our digital services to our 11 million online customers. And the transformation part means I try to help us move the agenda along from a overall customer journey, how we serve customers, and particularly kind of technology supporting that. I mean, I think the kind of numbers on the screen are, quite shocking, but I think there's a lot of, breadth and depth to those. So if you kind of dig under, the sort of 2.5 billion unbanked in the world, and actually look outside of places like Africa, and you look even to places like the UK or the US, doing some digging around last night, apparently 27% of people in Miami don't have a bank account. And you kind of think of Miami as a place where actually kind of the hotbed of kind of something pretty exciting, people go on a holiday, but 27% of people don't have a bank account. From a Lloyds Banking Group perspective, you'll probably know we're a simple UK-focused bank, retail and commercial, but financial inclusion deeply important to the UK as a whole and deeply important to Lloyds Banking Group. Just some stats from some of our own consumer digital research that we've done. 2 million adults in the UK don't have a bank account. So you think, even inside the UK, and the important part for me about how we deal with financial inclusion is what's going to work in some of the geographies that Vitas is working in, what's going to work in Miami, what's going to work in the UK. Underneath that is quite a lot of depth of difference in why people aren't being financially included. Again, so some stats from our research. So when we looked at the kind of UK population as a whole, 5.9 million people have never used the internet in the UK. So if digital is part of getting people financially included, we can't just think about putting technology on the plate, because we actually think about what's stopping those people using the technology. So I think for us, the kind of key question always around financial inclusion at Lloyds Banking Group is a simple one, which is what is stopping people moving forward in their financial lives, and then looking at the ways that we can kind of bring things to bear to solve that, and I'll talk a little bit about that later.
Thank you. Excellent. I'm going to hand over to Matteo now. And actually, over drinks last night, Matteo, I've put him at this point in the discussion, because if I had put him in earlier, he may have just completely blown certainly my bubble. So, Matteo, an introduction, and then your position on financial inclusion, please.
So, hi, my name is Matteo Rizzi. I founded Dino Tribe in 2008, back when FinTech wasn't even a word just yet. During my 13 years at Swift, the financial cooperative. And since 2013, I'm an investor, before with SBT Venture Capital, and now with the Omedia Network. I forgot to make the usual disclaimer, as I'm not an employee of Omedia, but an advisor. Please, you can't quote me saying Omedia says, because that's my own opinion. So I have to say this put into bed. Including you, David, you can't do that, okay? And in parallel to that, I also founded FinTech Stage, which is a conference platform that helps build FinTech catalysts around Europe. Now, about our conversation last night at drinks, I mean the part we can disclose, of course. I think that we would like to go beyond the definition of financial inclusion because, the word of financial inclusion, because most of the people understand that like, purely an emerging market problems. And I totally align with what John just said. A stat that was hoping you didn't say, because it's the only stat I know about the UK, is that in the UK we got 2 million people without a bank account, which is kind of paradoxical already. So the one-liner we like to define financial inclusion is actually deepening the financial sector, which is really about is way more about the underbanked than the unbanked. And so at Domedia we have, as an example, a huge initiative in the US, because half of the US households are financially distressed. There is a definition for being financially distressed, and the ones we use is that whenever in a household you have an event that lowers of 25% the monthly income of that family, they kind of cannot catch up, and they go into a vicious spiral that makes them out of the system. So this is the spin that we would like the world understand what financial inclusion is about.
Very good. Thank you. Finally, Jonathan, intro to
Sure.
Quona Capital.
To Quinoa Capital. I like that.
Quinoa Capital.
We are a fintech venture investor focused on emerging markets, and our real focus is on financial inclusion. So we are an impact investor. We are partners of a firm called Acción, which was in the microfinance business and has been for the last 50 years. They were our sponsor and an anchor investor. And our whole mission is to go beyond microfinance to address financial inclusion in ways that microfinance hasn't been able to fully address in emerging markets. We focus on Sub-Saharan Africa, Latin America, and India, so we have a fairly ambitious and global reach. Financial inclusion for us is about more than bank accounts. I think the bank account story is certainly an important part of the story in order to understand the depth of the need in emerging markets. But I agree with Matteo. For us, much of the focus is on expanding the menu of available services to both the unbanked and the underbanked. It's about being able to transform cash payments to electronic payments. It's about enabling poor people to be able to pay their bills in the convenience of a local kiosk or local market, rather than having to take a bus and go 2 hours with cash hidden in their sock to pay at a bank. It's about having microinsurance and other insurance products that perhaps are offered over a mobile phone available to them. It's about much more than a bank account. It's about those products and services we take for granted that make our life more secure, that allow us to build wealth and prosperity for us and for our families, and that allow us to be part of a broader community that opens up then doors for other financial services because we have an identity. But the other thing that I would mention with respect to financial services or financial inclusion is that it's not just about consumers. It's also about small and mid-sized business. It's about being able to offer products and services to small and mid-sized businesses that are the drivers of growth and of employment in emerging markets, and today don't have access to basic finance, invoice finance, trade finance, working capital finance, the ability to be able to take and accept card payments and the like. So a lot of our focus is on expanding the services available to small and mid-sized businesses, not just to consumers.
Excellent. Thank you, Jonathan. Actually, just picking up on one of the points Jonathan made there, I'm going to divert my first question to Vitas. Already we've mentioned financial inclusion, clearly as a topic, but we weaved in the term digital inclusion, right? And I know, Vitas, we've had a few discussions in the past about what kinds of correlation exist between these two, and is there a correlation, and if not, why not? What are your views?
Yeah, I think there is a slight correlation, because obviously digitization as a basis of digital transfers, that's the basis which is needed. But it is much less than you would expect, because I think it's less a question of technology than of the ecosystem. I liked very much what you, Jonathan, just said. It's not about the consumers only, it's also about the small businesses, and quite often, or most often, that's one and the same person, because everyone is doing kind of a business. In Tunisia, you have 250,000 grocery outlets for 10 million people. That's huge, and that's normally manned by one, maximum two persons, normally from the same family. So actually, the difference between one and the other, consumer or merchant, that is very, very gray. And it's very much about the ecosystem which we are in, and we need to make sure that those payments or those transfers, cashless or cash-light transfers, that they are enabled. So we need to have systems which allow that. And that's basically closing the circle. We obviously also need technologies which make this kind of transaction affordable, so that normal financial service providers can offer that to the business. And that is quite difficult, if not even impossible, for brick and mortar banks with their legacy systems.
Mm-hmm. So let me bring in a slightly different stakeholder map. Matteo, having looked at your colourful career and obviously straddling, I guess, in your time, many stakeholders, the role of policymaker comes up time and time again when we think, access to financial services. And the sad thing is, potentially, it's the consumers and the small businesses that lose out because, of the tension or the lack of alignment between these stakeholders. And knowing your passion for fintech and entrepreneurship and exposure to so many innovators, what is your viewpoint on how fintech itself can actually help to align these varied stakeholders and bring them closer together for the good of those small businesses and consumers?
So I agree with you, Nicole. So in most of the conferences actually and the debates, the regulators and the policymakers were the missing guy, in most of the places. We recently, 2 days ago, most of us were there. It wasn't the announcement because I think it was kind of a known thing already, but that regulation sandbox that the UK just established it to be able to to allow a field for startups to play and to comply and to be more aligned almost at the beginning, right, with the new regulation and what the regulator in the UK is trying to do, is actually a good example where is not anymore the startup in isolation, trying either to compete or to collaborate, but is really a bigger effort, right? Part of what Omidyar is doing is one, to try to support and co-create more of these sandboxes. So I don't know if this is really an answer to, if it's an answer to the question, is fintech helping, right? Because at the end of the day, it's a matter of people and organizations, right? But I do think that there must be ways must be found whereby the barrier to entry, to give access to a broader spectrum of the population needs to be found. Sorry, maybe the regulation is and the sandbox is part of the answer. Maybe there are other ways, but I think that we should involve systematically, the policymakers in the debate for sure.
Yeah. No, I think you have answered the question. Fintech has been a catalyst for so much, and I don't think without this so-called, in inverted commas, revolution in fintech, I don't think we'd be in the position we're at now with open doors, and certainly the FCA is a great example of really thinking forward like this. So,
and actually, sorry to complete my own answer, there is actually more than fintech, because it actually all starts with the identity, you know, and this is probably even a more compelling space where the policymakers can play a fundamental role, because without knowing who's who, and the person that is behind that phone is the one that is the ultimate beneficiary of that financial services we want to enable, you know, the game is almost lost at the beginning, right? So it's actually broader than fintech, that glue that we are looking for.
Which actually brings me to a really great question for you, Jonathan, is, you know, Matteo just touched on a really hot point there, which is this identity. And in thinking about an apt question to throw your way yesterday, I thought perhaps we could just touch on a pure technology view in terms of what's really key as a distributor for a route to market, so to speak, for financial inclusion. I mean, in your view, which technologies do you think are really right up there in being those true enablers? Is it, you know, digital identity? Is it IoT? Is it blockchain? I'd love to have, you know, your take on that.
Yeah, it's a simple one. Thanks, Matteo. Yeah, I mean, all of these technologies are exciting in their own way, and there are a lot of great initiatives that are taking advantage of things like blockchain and other things, and other more cutting edge, bleeding edge initiatives. But when you look at emerging markets and what fintech is able to do in these markets, it really is very tied to mobile. And mobile is I think the technology that has brought previously unknown, unknowable, and unreachable consumers into potential contact with a whole new breed of fintech players, and also with existing financial players. So that has been a major game changer. When you think about it, you have now in the hands of consumers all around the globe computing power that exceeds what the computers that we were using 15 years ago had. Places like Kenya, over 70% of phones that were distributed in 2015 were smartphones. So we're seeing smartphone penetration increasing at astounding rates in all emerging markets, and that really is a major game changer. The other is access to the internet, and that's again very tied to the advent of the smartphone. It's not just that people have mobile phones; it's that they have a smartphone, and more of those have data plans and access to relatively low-cost data plans, which is again really altering the way that we're able to interact with, reach clients that were previously unreachable. And for me, the issue of identity is also very tied to the mobile. So yes, it's being able to identify clients, being able to give them some kind of a score when you're talking about giving them credit, or even know where and who they are and how they are interacting with the financial system. Much of that is now enabled and is being driven by mobile. Yes, there are a lot of other exciting things going on, but if you look at what's going on in emerging markets, you look at the services that are really gaining scale. Much of them are leveraging the advent of not just the mobile phone, but of smartphone penetration.
Very good, very good. So, John, being the banker not in the room certainly, but on the side of the fence, I think there isn't a major bank who hasn't made a public statement in terms of their position on financial inclusion. Some have heavily invested in it. There is a lot of money and capital flowing into social impact causes. I'd love to hear your view on, is this really cutting what it needs to cut? Is it really making an impact? And where are the best models? I mean, you may be biased, but I'd love to kind of hear, as objectively as possible, what can banks really do in this space?
So I think the first thing to say is banks will have a part to play, but whole other parts of the ecosystem will have a part to play, right? And I think the if I were to do the sort of slightly trite version, every every person you can move into being, more financially included, it makes a difference. So if every bank just made one move, it would be a start. But actually, a lot of banks are making, dents at the sort of 50,000, 100,000, 10, millions. So I think every contribution is welcome. And of course, some will do it kind of better than others. I mean, I think there's again, you do your research, you look around, there's some great examples. I think a lot of Latin America have kind of got some great examples of how they've really driven financial inclusion in the sorts of, tens of millions. Banco Estado is a good example. Model in Peru that's coming out. Some of the stuff they've done in microinsurance in that geography. The sorts of things we're seeing from Vitas around the Monetas sorts of solutions are going to make a huge impact there. I think what you find with all of but if I come back to the kind of UK as a specific, what you find in kind of almost everything that you do is a set of common themes that you can at some point tackle through technology, but depending on where the customers are, what they believe, how secure they feel about it, where that particular demographic and population are, you've got to kind of do quite a bit of an adoption piece around it as well. So if I look at some of the things that simple things we do, non-tech things that we do, they do point to tech solutions. So you'll know the kind of immigration piece that's happening through Europe at the moment, of course, and UK government has agreed to take on a set of immigrants from Syria. Simple things you can do to get ahead of making sure those people are financially included is making sure we're up to speed on the policies of how to check their identity before they get here. Now in Nirvana, the identity piece would solve that, but actually that will help 20,000 people get access to financial services much quicker than waiting for some technology to come along. Now I think the way we solve that in general is thinking about the identity solutions. And you can do the same with offenders coming out of institutions, right? Getting back into the financial system is something that we do a kind of piece of. But back to the point I made about a huge number of people in the UK who are unbanked actually don't even access the internet. So getting them comfortable with actually accessing the internet, we've invested heavily in supporting community workers on education awareness. So I think there's a variety of things, if you can, in the low-tech version that point to where the high-tech versions must go. Every bank, I think, genuinely is, for the reasons that you talked about, government making it a kind of key priority of just...
That's it.
Government making it a key priority and therefore being just good business, but every contribution makes a difference.
Right. Well, I mean, we could have gone on. I had a whole ream of other questions. So, look, audience, you met everyone here. I encourage you to exchange with them at the break. Thank you so much. Fantastic topic. Could go on for days. Please do join us for the pitches on financial inclusion. We've got some amazing talent coming through the doors in a short while as well. Thank you.
Thank you.